Thank you very much, Nancy, for that introduction. Over 15 years in the front lines of global capital, I've watched and reported on trillions of dollars of breaking news. And I'm here today to help flesh out a fireside chat with an esteemed set of panelists to just get a bit of a reality check, I think, as well, some of the risks that we need to prepare for. And so the way we've decided to structure this panel is to have 4 angles of attack around safeguarding hospitality investments in the day and age that we live in. And each panelist is going to have under 2 minutes to respond. We go around 4 times. That gives everybody the same amount of time with full transparency and credibility that you have come to expect from panels at FHS. So without any further ado, I'd like to welcome Luc Delafosse, the Vice President, Hospitality Management at Khozama. We have AlaaEldin Saleh, the Chief Hotels Operating Officer at Madinah Holding Company. Cyril Piaia, the Chief Executive Officer at a yet-to-be-announced company, so confidential for the moment, but formally the Chief Executive Officer at Emaar, the Economic City, and then Naif, AlMadi, the Chief Business Officer at the TDF. Gentlemen, please have a seat. Thank you. All right, Luc, I want to start with you, just in terms of what you're seeing in your data dashboards today. There's a lot of uncertainty, a lot of worries. We have the US President Donald Trump, who is arriving imminently. You can see the prep work underway throughout the capital of Riyadh. From an economic and business side of things, can you describe what you're seeing today? Where are we?
Yes, it's actually been a very interesting journey. I've been here in Saudi Arabia since 2019, and actually every year we have seen major change, major shift in the hospitality industry. Not only in terms of projects, but also what I have seen myself is in terms of evolution. And the kingdom has actually led the way in terms of hospitality, not only in the region, but in the world. With this, having said that, obviously it brings a number of challenges as well. You cannot achieve such great projects without any efforts and challenges and difficulty. And we've heard this morning on this stage quite a lot of components of how to actually overcome those challenges, whether they are in the execution, whether they are financial, and more importantly, how to bring the people to be able to be at the level of expectations. And that's actually what I think is going to be the next major challenge for hospitality particularly, is how to bring up people to the level of expectations in the future. And for this, in Khozama, for now 6-7 years that I had the honor to actually serve this company, we have worked extremely hard to actually train and develop our people at the same time as developing our projects.
Yeah. Naif, can I get you to weigh in on this from the TDF perspective? Can you weigh in on what you're seeing in terms of the data, in terms of the economy today at the TDF? Again, you have a great sort of prism into what is happening with sort of tourism development.
Okay. Look, I'm very happy to meet you, Luc. You came in the right time. 2019 is a critical year where tourism has boomed big time. And I think in Saudi we have a lot of opportunity. The market gap is huge. If you see, you know, the beauty of the land in the center of Saudi, where is the capital, where is the business is going, and also when you see the mountains, beaches, desert. So there is a lot of opportunity within Saudi, and I think our role under the Vision 2030 is to enable private sector, tourism industry to enhance and to believe in Saudi. And I think this is, now we are, after 4 years of, and 5 years of hard working, it become more mature.
AlaaEldin?
Yeah, first, thank you very much, Yousef, for the invitation, and allow me to express that it's an honor to be here with this exceptional gentleman today. And allow me also to make a brief introduction of Royal Madinah, what we are doing, what's the project about. Royal Madinah, part of the, it's a PIF company, having a vision to develop in the real estate hospitality, but also in the real estate sector. We have two major projects that we are working on, part of this vision of the tourism. One project in Dar al-Hijra, another one with Royal Madinah al-Haram. Those two mega projects will play a mega role for the development of the hospitality, elevating its level and elevating as Al-Madinah Munawwara as a cultural destination, rich in heritage. We are working on two projects, but those projects, they have hospitality assets, but also have this integrated hotels and integrated residential as well. Royal Madinah, part of the 2030 vision, aligned with the 2030 vision, should contribute with 140 billion Saudi Riyal in GDP by the completion of the project. We have an actual spend of 7.5 billion today, and we are looking forward to engage more investors and co-investors in the future to be part of this hospitality transformation of Al-Madinah.
So it sounds to me like you're telling me that you're not seeing any of the global economic uncertainty sort of feeding into your decision making. You're saying it's still all full steam ahead with your projects and your commitments, is that correct?
100%, even more than before. We are much more engaged than before to commit with our commitment with the Vision 2030.
Cyril, let me get to you now. Before we came on stage, you told me that you've been, of course, part of the Kingdom story for quite some time in sort of different capacities. We were joking about the lunches at Khozama, in the very early days in the 90s, and it was like a destination. I used to go there with my mom. I haven't been born or raised in Riyadh, so I bring sort of a unique perspective to the debate. But what do you make of where we are today? Are there any red flags, anything you're concerned about?
Assalamu alaikum first, everyone, and thank you very much for having me on the panel. I think just a note on the fact that such kind of event like Future Hospitality Summit is really a testimony of the fact that hospitality and tourism is becoming more and more important in the economy of the country. This is one of the key drivers under Vision 2030, and these sessions like today are showing it. What I can see from what's happening in the country and related to tourism project is that there is still a lot of interest from investors and hotel operators, but provided that there are numbers of conditions there. First of all, that projects are aligned with Vision 2030. That's the very first thing. And the second thing is that there is a lot of things happening towards international branded hotels development, like the Marriott, Accor, Hilton. That's one of the big trends. The other big trend is, I would say, experience-led type of hotel development. Typically, for example, I see my friend Chris here from Envy. It's all about experience tourism. And that's, I would say, the second trend that I can see. And then, of course, there is a big push towards luxury, ultra luxury, because this is one of the key differentiation of the kingdom compared to other tourism markets, so luxury. And then I would say one huge key success factor as well is the opening of the holy cities in Mecca, Medina. The market is huge, and the potential with pilgrim tourism is just amazing. When you see that, like, I think there was 2 million Hajj pilgrims and 35 million Umrah, so you are talking 37 million, which is a 25% increase compared to last year. So there is a huge appetite from investors to bring capital to the holy cities and support pilgrim tourism projects.
In the run-up to this conference, I spoke to a few heavyweight investors, and I was trying to get a sense of, okay, well, if tariffs are here to stay and the economic uncertainty continues to build, what's going to happen with the tourism story in the kingdom. And you could argue that any shift in global trade dynamics could present a chance to attract new investments and new visitors, right? So maybe this is the way we need to look at it, rather than, is the Saudi tourism story going to be okay? Yes, more likely than not, for many reasons, in part as well because there's a strong relationship between the US and Saudi Arabia. So if tariffs are going to be around, they aren't going to be meaningful, and they would affect exports to the US rather than imports from the US. But maybe you could weigh in for this on me as well. Where's the opportunity here then amidst the noise? Any takers?
Yeah, if you allow me. Look, what's happening in the world, I think it's affecting the world, no doubt about this. However, in Saudi, the tourism industry is a new industry. The market gap is big. Also, Saudi has a different advantage that we have a domestic market, huge domestic market that represent a lot of part of tourism or tourists within Saudi. You're talking about 70-30. And we are building to serve this market also. However, plus, we are working in the tourism industry, our ecosystem, to bring more tourists to Saudi, capitalizing on the effort that STA, Saudi Tourism Authority, is doing. So, again, I think Saudi, despite the effect that's happening worldwide, we are doing good, and the effect will be minimal, inshallah.
Yeah, actually, you can see the tariffs from the US as a headwind or a bad news. But actually, I see the opposite. I see this as an opportunity and a catalyst for Saudi economy and Saudi tourism economy to be more resilient. And one of the way to be more resilient is to push localization. This is what the country wants to do. We want to localize everything. I mean, the resource, human capital, and so on. So push localization of F&B supply chain, construction material, and so on. And focus maybe probably on what I was saying before, experience-led tourism, where your experience of tourism does not rely on expensive goods that you would bring from abroad, hence you would suffer from tariff. But this is more related to the storytelling, the culture, the nature, things that are actually not costing anything, but that are translating the Saudi soul and tradition. And that's something that will protect actually the country from any economic cycle or tariffs from the US. And then probably the last thing, let's not forget that Saudi is having a real pricing power on, again, pilgrim tourism and ultra-luxury market.
AlaaEldin?
Yes, absolutely. I think we have to look at it from theoretically part, which is if the tariff increase, as it was announced, definitely all the hotel operation expenses will rise with it, which is natural. The traveling and the air flight will increase. The cost of construction will definitely follow and will increase. So theoretically, it has to have a certain influence on the hospitality in general. But let's go to the latest analysis of what's happening on reality today. Today, last analysis was communicated that the influence of tariff was only in two regions, which is US and Canada only. All the other, we're talking about hospitality sector only. All the other region of the world in the globe was not affected at all. For a simple reason is that there was lots of exception in those tariffs, which is not maybe announced, and it's changing all the time. So nothing really happening on the reality. Let's take US and Canada. What's happened in the hospitality? There was an increase in two lines only, which is the food and beverage and the maintenance and engineering, which is even not less than 4%, 3.8% to be precise, which is nothing in the hospitality sector. We go back to Saudi Arabia, and this is what we care about most today, is that I do not think that there will have any influence. Saudi Arabia is much more shielded to resist any future tariff that will be imposed for several reasons. Number one, The government support for the infrastructure, the government subsidizing lots of real construction of new hotels. Royal Madinah is one of the examples. We have a project of putting in the market 47,000 key rooms, which is a huge number. Other projects like Red Sea, Neom, Mecca also have its own project. The second reason that Saudi will be resistant to any tariff change is that the supply chain. The supply chain is one of the most important things, and I agree 100% with Cyril when he said it's an opportunity, Cyril. Totally agree with you. It is an opportunity for local to produce and avoid and reduce much of what we import every day. Saudi Arabia have increased a lot the production of food within the material of construction as well. So, by the way, I would like to announce, which is an important thing for us as Royal Madinah. Royal Madinah won lately the Excellence Award of Local Content offered by the government. Local Content Government Authority, which I'm trying to remember the name exactly.
Congratulations on
96% of all our contract was awarded locally, which is a huge success.
It can definitely serve as a benchmark. Can I get a read of the room here to see who is worried about rising prices? It can be rising prices related to hiring and staff. It can be related to your supply chains and inventory. So if you believe, there's reason to foresee higher prices this year into next year, if you could raise your hand, please. Wow, this room would be, the perfect group of people to bring in with the central bankers of the world. They'd love to hear this. Inflation's under control, right? So this is the correct conclusion. I'm actually on the other side of this. I think there's a lot of cost pressure still coming in the pipeline, and that's going to crystallize in the coming weeks. Luke?
Yes, very interesting. What we have seen in the last few years, actually, is that we've seen some oil pricing change in the last few years, so it's not the first time. And clearly, the kingdom is very well positioned to actually drive this situation very, very well. And in addition to that, when you look at the internal development in the kingdom has a plan. The kingdom has a vision. The kingdom clearly has the means to actually execute the vision. So despite, all what we are seeing and hearing that can change tomorrow, next week, next month, I believe personally that the plan is being very well executed. That, yes, of course, there will be an increase in the construction cost, very clearly. We know that. And obviously, we have to take that into consideration. Obviously, we might have challenges. We will in the financing, in the execution. But up to now, and what I was very, very pleased to hear this morning is that when we heard that 90% of the projects within the kingdom are actually being delivered. 90%. This is a big statement, And another key number I heard this morning, what was actually very interesting, is that 50% of what is happening and the development, within the kingdom is actually produced and delivered from non-oil, in a way, production pricing. So, which to me shows that the kingdom is actually really managing the change, is actually executing the change extremely well. And actually, this is why we are here in the kingdom today.
Yeah. I mean, you mentioned oil prices. The Saudi current account moved into a small deficit in 2024. That's despite oil prices of $80 a barrel, according to Bloomberg Economics. This year, if you look at Brent at the moment, where are we? $61 a barrel. So that implies there could be more pressure. So question to the panel here, maybe Naif, if I start with you. Talk to me about what you're doing to de-risk, right? And sort of how you can actively offset any potential turbulence if the government decides, or the whole economy decides to withdraw a little bit, pause or consolidate, right? We're not necessarily talking about a depression and a recession, but as it already has been, a bit of a recalibration.
Yeah, great question. I think this is TDF, Tourism Development Fund, role is to de-risk the risk on the private sector. Within the Tourism Development Fund, we offer lots of solutions to help the private sector to de-risk their businesses. We do long-term financing for project. We offer guarantees to support financial institutions to finance tourism projects. Also, sometimes we step in and put skin in a game and invest with the investor, especially international investor, who are hesitate to enter the Saudi market. So this role is important. Also, I want to just comment that we don't compete with banks. We cover the bar that banks doesn't cover. So you will not find us a lot in Riyadh or Jeddah, but you will find us a lot in places like Cake, Asir, Hail, so where we support a lot of projects there. Up to now, Tourism Development Fund financed more and invested in more than 2,200 projects. Those projects will deliver more than 8,000 rooms. Also, the value of this project, which we committed, is 35 billion Saudi Riyal. This is a huge number, all of it directed to the private sector.
I see you're nodding in agreement there, Cyril.
I totally agree with my colleague from TDF. Look, first of all, on the figures you were mentioning, like 3 to 4% deficit and 50 billion a year. I mean, we need to put this in context. Looks big numbers, but actually it's small. I mean, if you compare to the country where I'm coming, the deficit is like I don't know, like a couple of trillions dollars, and you cannot see the deficit without the debt. Currently, the debt of Saudi is very low. It's $250 billion compared to, for example, France, which is $6 trillion. So those figures are not that big. And how do you tackle that? I think, and this is what has been done by the government right now, is that you look into making some priorities. You look into try to be more disciplined in terms of spending and probably phasing projects. And I hate journalists, when they are jumping and saying, oh, this project is canceled, which is not true. It's actually phasing out projects. And I've been in development since the last 25 years. I never saw projects that are not having delays and projects that are not having rephasing. And probably the last thing that is going to happen is having a bigger focus on short to medium-term profitability and commercial viability of those projects. Even though we do PPP and we get the support of TDF and the government, we need to make sure that those projects done in partnership with government still have their own commercial viability with operational ROI that is making sense. I think that's really the triggers.
Yes, what is interesting when we look at, for example, any numbers like you mentioned, Cyril, about the deficits, where what I see myself personally is more opportunities than a weakness. If we were to do a SWOT, I would put it as an opportunity. So clearly, I would not see it as a weakness, in the vision and in the plan. However, at our very smaller level in Khozama, what we have learned, in the last few years is that not only you need a direction, not only you need a 10-year, 5-year plan, but you need also strong budget. And sometimes, I have to say that we were actually very optimistic, a little bit too optimistic with our budgets. But what we've learned very much is how to forecast. And clearly now, I think the companies that will, in a way, continue to do well will be the company who have strong vision, strong plan, and strong forecasting. And I think that is key in managing financing, particularly when you have changes in the economy as we have seen in the last 12 months.
Are you making any changes today in preparation for potential bumpiness this year or next? Right? Again, you're a man who's been in the industry for many years. You've been through the cycles, so you kind of know how to prepare for that, right? I mean, the cyclicality element is a reality, and at the end of the day, when you sit with your board, with your investors and stakeholders, you say, hey, are we going to be cautious next 3 to 6 months? Then after that, things are going to be really good. Or would you say things are as good as they always are? For Khozama, that's obviously the caveat. That's where you have vision into.
Yeah, no, that's very clearly. And I can assure you, I will give you a few answers. First of all, de-risk is very important. Number one, I wanted to finish on that. You cannot take risk if you do not actually take into consideration that at some point, you have to look at how you can de-risk. This is very important. This is exactly what we are doing in Khozama as well. And whether or not, if I am being challenged, I am being challenged every day. And that's what actually I'm here for. I wouldn't be here if it was easy. So clearly, yes, this is part of our ongoing process within Khozama, is to look at how the cash flow flows and make the right decisions, adapt to the situations, constantly. And that's what we are, and we are driving our teams in Khozama. All the departments within Khozama, whether it's finance, HR, marketing, operations like I am, we are looking at our numbers and we are keeping a finger on the pulse of our numbers every day.
AlaaEldin?
Yes, I agree with the gentleman. Most of what was said, if not all of it, certainly. I think we don't have to take Saudi Arabia as an isolated case. We have to look at it, what's happening around the globe. Having a deficit on a GDP is something that's happening with the biggest country in the world. Let's take an example, India. India had the same, it's a big, huge country with a huge population, had the same deficit, almost the same, and they work on the reforms, cutting costs, working on pushing the manufacturing, and it has, after a couple of years, it has more than 2.9% impact, positive impact on the GDP. Brazil, exactly same exercise, work more on privatization of the assets, public assets became too private, and what's happening that they had an increase of 2% on the GDP. Chile is a very interesting country because it's a similar country who had a big dependency on the copper. While the price of the copper was going down year after year, Chile has to find another solution, and they went to the lithium production. And they means everything, they put all their bets on the lithium. The results, 1.2% increase in the GDP after 1 year. We have Vietnam. Vietnam had the similar exercise, and after pushing the manufacturing of technology, inviting the biggest technological company in the world, like Samsung, Intel, to produce in their own country. And even during the pandemic, if you remember very well, Yousef, there was a problem in the world of chip production. It was rare, and it was very difficult to find. A few years before, the country have focused on chip production, and they have been the first exporting chip in the world. So when we go back to Saudi Arabia, what's happening is nothing different from what's happening all over the world. Saudi Arabia definitely have started to revise their spending. They have, like Royal Madinah, one of the things we are doing is we are looking for co-investors, private sector to work with the public sector together in hand in order to increase the hospitality. This is one of the things. Another thing, Saudi Arabia is heavily more investing now in the hospitality more than before because we believe in that sector. Why? For two reasons. Saudi Arabia is investing in the luxury segment, which is very unsensitive in any channel of the world. People will still traveling if the luxury, even the prices increase, and it will bring it back just after the project completions all over Saudi Arabia. Mm-hmm. And the second thing, Mecca and Madinah. It's a unique destination where it's bringing more than 30 million visitors to the country by 2030.
Thank you very much for those closing remarks. That's all the time we have. So a big thank you to all the insights from our panelists and, of course, to you for being such an enthusiastic and patient audience. Thank you very much.
Thank you.